Hi, my name is Eric Kimberling. I'm the CEO and founder of Third Stage Consulting Group. We're an independent digital transformation consulting firm based here in North America with a global client base. And the other day, a colleague of ours, one of our team members at Third Stage, shared an article with me from the Wall Street Journal about IBM closing its deal with Red Hat, which Red Hat, if you don't know, is a cloud service provider, cloud hosting provider, and is a $34 billion acquisition and a pretty big deal that IBM is consuming here. So he shared the article with me and started asking some questions. We had a good discussion around what this means to the digital transformation space, what it means to customers, most importantly, and what it means for longer term trends. So the first takeaway from this is that, first of all, the cloud is real. I mean, I think most people recognize that there's a growing trend and a tipping point we're reaching about cloud reaching that tipping point. In fact, we recently posted an article several months ago about how cloud had finally reached the tipping point. And in fact, I've included a link to that article below if you'd like to read more about that. So in the info section of this video, you can find the link to that video or to that article. But that's the first thing, is the cloud is real. Companies are really going this direction. IBM is obviously doubling down on the cloud movement and is willing to take a bit of a gamble and a bit of an acquisition here with the Red Hat product. So that's the first thing. The second thing that's somewhat related to that is that investors love the cloud. It just confirms and validates the fact that investors want there to be more cloud movement. The reason being, it's steady revenue, it's predictable, it's subscription based, it's high margin. So, and it scales very, very well too. So from an investor perspective, this is a very good thing, and it shows just how much money investors are willing to put into the cloud and how much additional valuation of stock that companies that are focused on the cloud, what higher multiples they have and what better investments those stocks end up being. So investors clearly love the cloud, and you're seeing it in the ERP space where investors are rewarding the companies that are pushing harder into the cloud and moving that direction. Which leads to a third takeaway here as it relates to this acquisition, which is the industry is becoming in a situation where they're buying their way into cloud offerings if they don't have it themselves. So a few months ago, I think it was last year actually, in 2018, Oracle bought NetSuite. And that was Oracle's way to not admit defeat in the cloud space, but a way to accelerate their movement and migration into the cloud space. And IBM seems to be doing something similar here in buying Red Hat and sort of buying their way into the cloud market, which they hadn't been super successful at up until that point. So Red Hat being a successful cloud provider, IBM buys them, and IBM suddenly has a legitimate footprint in the cloud space. So those are three of the big takeaways as it relates to just the general, what does this mean in the market and the industry overall. But I want to bring it down a level now to the consumer, to the end CIO, the organization that's about to go through a digital transformation. What does this acquisition mean to them? And there's a few things here. First of all, I'll start with the good, and then I'll move over to the challenges that this presents. On the positive side, this acquisition provides a more viable choice for many companies that had sort of automatically defaulted to either Amazon Web Services or Azure on the Microsoft side, and some of those other big providers that tended to be gaining a lot of market share in the cloud hosting space. So IBM's acquisition of Red Hat, although it has its own sizable footprint, now you've got the resources of IBM behind it. Suddenly, you suddenly have a tier one sort of provider in the cloud hosting space. So that's a good thing. It provides more options now if you're looking for that big scalable cloud hosting provider. And suddenly you have that more so now with Red Hat being owned by IBM. Related to that too, kind of tying into the second thing finding that this relates to as it relates to customers is that now the big guys are getting bigger. So IBM now is even bigger with its new acquisition of Red Hat. And so you're seeing a consolidation in the market starting to happen where some of these smaller cloud providers like NetSuite being acquired by Oracle and Red Hat being acquired now by IBM, they're getting acquired and gobbled up by big guys, which isn't on the surface a bad thing, but it means less negotiating leverage and for the end consumer, and it means that the providers themselves are gaining more share and more leverage as a result. Which leads to the third thing that's probably the biggest takeaway in my mind as it relates to this whole acquisition and this whole trend in the marketplace, which is it's also driving more bias in the industry. So because there's more money chasing these types of deals, there's more deals like this happening as it relates to moving to the cloud. Now you've got suddenly a whole nother provider, a huge company in IBM, that's going to be pushing companies even harder into the cloud. So on one hand, while I'm saying that yes, cloud has reached a tipping point, it still has not reached 100% adoption for a reason. And that is because a lot of companies are still either risk adverse or have some sort of reservation about moving to the cloud. So that is okay. It's not a bad thing that a certain amount of companies want to remain on-prem or manage their own IT departments. In some cases, that could be a competitive strength. It could be a competitive advantage for some companies. For others, they want to treat IT as a commodity and get it out of their four walls and into the cloud. So we just have to recognize that this acquisition now means that there's more money chasing one answer, which is the cloud, which is pressuring more people to move into the cloud, which may or may not be the best answer for most. So that's, if anything, of a downside, I'd say that's probably the biggest one that we just need to be aware of. It's a market dynamic that's very real. But as we're navigating our decisions around how we handle our digital transformation, that's an important component, is to really see through the biases, where the money is and where the vendors want to take us, and look at our own business and look at what's best for us, what best aligns with our strategy as an organization, and go that direction, whether it's the cloud, on-premise, big tier 1 ERP, or best of breed industry-focused solutions. Whatever the case may be, we have to look through the sales hype and the investor preferences and the big company biases towards what works best for us. So that's the big takeaways from today. The one thing I didn't get to in this video that many of you may be wondering about is the whole debate over Linux, the whole open source software. If I start talking about that, quite frankly, I'm over my head. So I'm not going to bring that up, but I'd be curious to hear from more technical folks that might be watching this video what your thoughts are on Linux and what that means for as it relates to this whole acquisition and path forward. So I hope you found this video useful. Hope to chat with you all soon and have a great day. And if you don't mind, please subscribe to my YouTube channel to get updates as I'm posting more videos here in the coming weeks. So hope you have a great day and we'll talk soon. Thanks.